Good morning, everybody. And this is the pre-market prep for January 21st. I don't have any stocks on my watch list at the moment. Everything is kind of already making its move, but I am going to go ahead and do a quick talk about what I am expecting and what I am watching. So as of right now, I am fully loaded on my positions. I will not be entering anything else until sometime next week. I'm heading back to my other job next week probably, so then therefore while traveling I am not going to be holding any open positions. But I got my VIX hedge, pins, take two, Peloton, Zoom, and Square. All of which are looking okay to small winners to pretty big winners. Took half profits on take two yesterday. And I rolled SQ or Square. I took a loss on the position I had that expires this week, but then I rolled it into next week because the setup still looks good. It's a green 10x bars. You got a daily squeeze. Momentum's turning blue, the light blue again. Just looking for it to go. But that is something I think everyone should be watching for Square. But, okay, so we'll go ahead and talk about what I'm watching since I'm not entering any other positions. See, the Dow's up only 0.6% or 0.06%. S&P futures 0.15%, and then the Nasdaq almost 50 or almost 0.5% higher. So what I am, what do you want to talk about here? All right, if you recall the last two pre-market preps I talked about, we came down this base, had this tweezer bottom, and we're going higher. So we're obviously going higher. We're hitting the upper Bollinger Band. So things are rocking along, right? We're going. I also mentioned to watch the 4-hour squeeze. So we had that 4-hour squeeze. It's a watch movie firing, or it was firing yesterday's pre-market prep. So it fired, right? And so now we're boom going to top. We're starting to get early out signals on the 4-hour chart. That's the dark blue candles. If you get two in a row, that's about saying that's about the momentum starting to slow down, is basically what it means on the 4-hour chart anyways. Now if we come to the daily, we have our first firing dot. So the squeeze is firing on the daily chart as we're going higher. We are in a weekly squeeze that has triggered, was that 6 weeks ago? And the textbook answer with squeeze is it fires for 8 to 10 bars, but it's not an exact science. It could do more, it could do less, it could honestly do whatever it wants. But point is, as we are nearing that 8 point, so maybe coming to a slowdown on the weekly chart. So if we slow down the weekly chart, we could expect to go sideways to slightly down on the daily. So all that being said is you might want to be cautious, have some hedges on, and not to mention that, go ahead and move this over here. Pay attention to the skew down here. We did drop down to 135 right here, and then we're right back high. So getting near that high every time a big or a little dip in the market happens. So just something to think about, be hedged. I personally have some out of the money debit spreads on the VIX because if the market goes down, the VIX will go up. And that is just something to hedge my long positions. And one last thing, bring this. If you're not familiar with ATR, it's average to true range. It's the average movement of a stock or index, whatever it's looking at, that it moves in the given time frame you're looking at. So every line here, so here's the 21 EMA, 1 ATR, 2 ATR, 3 ATR. Same thing here. That's going below the mean. So then we have 1 ATR, 2 ATR, 3 ATR going above the mean. That being said, if you look, we hit 2 ATR, we'll kind of drift down to the 21 EMA. If every time you hit the 3, you're more than likely to get a big pullback. Hit 2, down to 1, 2, 1. You see we're just bouncing between 2, 1. Sometimes a dip to the 21, 2, 1. You get the point. We're just ziggy-zagging between 1 ATR and 2 ATR. And that also makes sense since we are in a weekly squeeze that has fired, and now we're in a daily squeeze that is starting to fire. So my expectations are we're at the 2 ATR. We're here. I expect the dip to maybe the 1 ATR or maybe the 21 EMA. I don't think that's too much for the 21 EMA, though it is possible. What my main expectation is, and what I've kind of noticed from trading the squeeze setups is, and we're also at the 3 ATR on the 4 hour. So the 4 hours kind of indication of the daily. So that may be an indication we're going to pull back some. Anyways, back to what I was saying. So the daily squeeze is firing, meaning momentum is being released to the upside, but we're extended. So what I have noticed what happens is what you can expect is a flush down to the 8 EMA, because that's one of the strongest momentum EMAs there is. It's a sign of good momentum. Hit it, and that's a good entry point for a way to go for a position to go to the upside off of a squeeze that is just firing. Now, as far as targets, you see the 1618 has held. Let's see, since we're at all-time highs, it's always kind of difficult to see where you could go, but let's draw some new fib lines. Let's see what we get if we go to this high. So we broke above that 1618 from a daily standpoint. So if it has the squeeze fired, we're hitting there, we could make sense we pause there at least for another dip. And we're at the right above the 1272 extension on the daily. And we're extended as far as ATRs go. So anyways, what I'm getting at is to at least have some sort of hedge on and be somewhat cautious. I know the market's showing a lot of strength, but it's always good to have an insurance policy out there to cover your butt. So that's the S&P futures. Another one I was looking at was the NASDAQ, which has pulled back about 0.25% already. So look, we are above the Bollinger Band already. And I was looking at the squeezes here. This squeeze has not fired yet, but the weekly squeeze is only in a 3-week firing time frame. I did just draw these fib levels, and if we're firing, it would make sense we come up and hit this 13,583 level before doing a big turn down to the 21 EMA. But if it gets firing, maybe test the 8 EMA again, then go back higher, like I was saying. Same for the S&P futures. But because the overall trend is higher, like you have the stacked EMAs on the weekly chart, we're in a squeeze firing long. Yesterday, the mid compression squeeze fire, so it's red, that's the mid compression squeeze. We have a black dot, which means that the mid compression squeeze fired. We're having early end signals for the low compression squeeze, which means the entire squeeze may fire. The question is when, but I wouldn't be surprised if a quick pullback to the 8 EMA before heading higher and seeing where we stop from there. But as far as the NASDAQ goes, this is the level I'm watching to see how we react there. And I'll be watching the ES. This may be the top before we do a quick little pullback. But like I said, I'm not watching any stocks today, just managing my positions. I have orders out to scale out at half and break evens for the rest of them. And we'll see how those react. But if you found this video helpful, please subscribe, like it, share with your friends. You know the routine. And thank you very much for watching. If you have any suggestions on what to cover in these videos, please let me know as well. And so yeah, make sure you have a trading plan before trading. If not, you should be paper trading and experimenting to see what works for you, and trade the plan you have and master your emotions. So take care, everybody, and trade safe. Later.